Hey, this is Greg. Welcome to Uncut Friday. And on this edition, I'm going to talk about the current state of the market and how you can profit from the current tech wreck. All right? So anyway, Fridays, I talk about different things that are of interest to me, and hopefully they'll be of interest to you. And today, what's been on my mind has been what's been going on in the market. Yesterday was another very volatile day. That was March 4th. And the continuing sell-off in the bond market, as expressed by the 10-year Treasury, continues to be seen. And, on this channel, I try to sort of read the tea leaves, so to speak, and then connect the dots for you so that you can improve your investing skills and your knowledge. Today, a very strong jobs report came out, and over 300,000 jobs were added, and it provides further evidence in my mind that the economy is improving on its own. As I've said on previous videos, the vaccine coming in is really contributing to that. And I've expressed also previously that I do not believe that this 1.9 porkathon that the Congress is passing right now, $1.9 trillion porkathon, is, and incidentally, one of my subscribers came up with that term. Okay, I didn't come up with that, but I love that porkathon. But anyway, I don't think the stimulus package is needed. The economy is going to improve on its own. And all we have to do is open up the economy with the vaccines coming in, and everything is going to take care of itself. Never bet against the U.S. economy. But they're going to go ahead and do it. And I've said previously, and I'll say now again, that I think this is going to, flushing all these trillions of dollars into the system is going to cause inflation, because there is enormous pent-up demand in the economy right now, and when the economy opens fully, there is going to be enormous growth, and it's going to really take off. And flushing this much money into the system, no doubt, is going to cause inflation. Now, one of the things this week that really amazed me was that Powell, the Fed chairman, spoke at a conference, and the market was expecting him to address this issue of the 10-year Treasury selling off and rates going up. Incidentally, this morning it hit 1.6% again. People were expecting him to address the issue of the porkathon bill and rising inflation. He really glossed over it again. He's not taking it seriously, which leads me to believe that the Fed is behind the curve. Maybe he knows something that I can't see. That's always possible, but I think he's behind the curve, and I think that once the market perceives this, you're going to have more continued volatility in the stock market, and it could get very ugly, as it did yesterday. I mean, the Dow at one point yesterday was down over 700 points. It rallied back a bit, but clearly the market's nervous. I think another thing to keep your eye on is there are things going on in the bond market with respect to liquidity, particularly in the 10-year area, where there are so many people short the market, short the 10-year, with the same belief that I have, that it's signaling inflation and the market's going to continue to sell off. There are so many people short the market that you're seeing in the repo market and elsewhere liquidity issues, and nobody's talking about it, and that always concerns me, because it's always the thing that people aren't talking about that ends up whipsawing you and kicks your ass, so to speak. So I am very concerned about the long end of the Treasury market and its impact on the stock market, and it's going to result in continued volatility. I also have like zero confidence in the Biden administration. I think that I'm not going to dwell on that in this presentation, but I think that the Biden administration is proving to be extremely weak. They're putting forth a lot of policies that are very damaging to the country, not so much the economy, because I think the economy is going to take care of itself. But I'll leave that for another video. But as it relates to us and what we're trying to do here, and how to navigate this, it really comes down to how do you make money in this environment. And I recommended a long time ago, and I was months and months ahead of this. I was talking about the bond market rising months and months ago. But if you're still holding these, I call them bubble stocks, which are the many of the high-tech stocks that have these ridiculous valuations, I would be cautious there, and I'd be looking to raise cash, because there will be some opportunities. Now, I'm not going to talk about specific stock recommendations in this video, but one way that I would play this is I would look for extremely oversold situations. Like there was one point yesterday where the NASDAQ was down 3%. From a trading perspective, and even from a long-term perspective, I would be looking at the 𝐭𝐞𝐞, which is basically the ETF that mirrors the NASDAQ. And I would be looking to either go long that when it's in an extremely oversold position. And I've done videos in the past where I showed technical analysis on how to determine whether something is completely oversold, and I refer you to that. But what I would do is would look for the NASDAQ being in an extremely oversold position, and I would look to either go long the 𝐭𝐞𝐞, or for the more advanced in the audience, and hopefully there's a few of you, and I don't recommend this for everybody, but you could sell puts against the 𝐭𝐞𝐞. That is a way of going long the 𝐭𝐞𝐞 in the options market. It is purely a trading strategy. It's something that I'm involved with, but that's very advanced, and not everybody qualifies in their accounts for selling naked options. You have to be a level 4 investor in order to do that, and I wouldn't recommend that for anyone who is a novice or who is not extremely experienced in trading. But that is another way to go long the 𝐭𝐞𝐞. I'll be coming out with another video in a more organized format that I will have some specific recommendations on some tech stocks to take advantage of this tech wreck, which will continue. And this is something also I've been talking about for months, and now it's finally happening. But there will be ways to play this where you can play it to your advantage. There are some names that for long-term investors will be phenomenal investments going forward, despite the short-term volatility. So anyway, the message of this video really is keep an eye on the 10-year. The sell-off is not over. Keep an eye on liquidity, particularly on the long end of the Treasury market. There is stuff going on that I don't fully understand yet, but it concerns me and worries me because there is a lack of liquidity building up in certain parts of the Treasury market and the repo market. And then finally, keep an eye on this stimulus bill, which is going to get passed, and it is going to cause the economy to overheat and increase inflation. And you're already seeing it in all the many of the commodities, and that's going to continue. And we're in for some rough sledding in the next couple of months, but you know what? That presents opportunity, and I'm going to be right on top of it. So if you want to follow my views and stay on top of my trading and investment ideas, please subscribe and like this video if you got value out of it. And I'll keep trying to read the tea leaves for you and connect the dots, and hopefully you'll be able to benefit in the form of profiting, both in the long term and in the short term. Okay, so this is Greg saying goodbye on a very cold day in northern New Jersey, and I'm freezing my butt off out here, so I'm going to conclude this video. So take care, have a very good weekend, and I'll be coming out with some new content on these and other issues very soon.